Good afternoon, financial professionals. Abby Fletcher here of E4 Insurance Services, welcoming you to the Brew, Building Relationships Every Week. Thanks for tuning in today. For those of you joining for the first time, we like to start the Brewcast by celebrating today's National Day for October 7th. First up today is National Walk to School Day. This National Day originated in 1997 by an organization called Partnership for Walkable America. They focus on making communities more walkable. So get those sneakers on and enjoy the walk to school today, even if it's only to the kitchen table. Also, today is National Pumpkin Seed Day. The Aztecs and Mayans were believed to revere pumpkin seeds as a powerful source of nutrition. They certainly had this right, as 1 ounce of pumpkin seeds has 2.5 times more protein than a hard-boiled egg. So treat yourself to some pumpkin seeds today in celebration of their special day. Today on The Brew, we have our partner Brad Newcomb, who serves as Regional Vice President at Global Atlantic Life. He'll be sharing insights on business continuation planning with emphasis on cross-endorsement and buy-sell. Feel free to use the chat box below and share your thoughts while Brad is live. I'll be keeping an eye out for your questions so we can provide real-time answers. Also, all attendees are in a drawing for a prize, and we'll be announcing this winner shortly, so stay tuned. Thank you all for tuning in. And without further ado, Brad, welcome. The mic is yours.
Thank you, Abby, and thank you everyone at E4 for the invitation today, and thank each and every one of you for joining. Definitely love these opportunities to share quick ideas that you can take directly back out into your practice immediately and implement. And today's focus is around a small portion of business planning, which is business continuity planning. And I don't know if you've seen this, but we have definitely seen it at Global Atlantic. Since the pandemic started, is a lot of business transition planning has emerged. A lot of individuals that were planning on staying in their business for a period of time are now rethinking that and saying maybe it's time to hang it up and get this on to the next generation or the individual and the executive team at that business today. And so what we've done is created some tools to take complex advanced planning ideas such as buy-sell and put it in a easier to understand piece of information that actually brings in real information from our ledgers and illustration software and takes that planning and shows how the money flows, how the different tax implications may come into play, tax savings, etc. And we'll go through one of those examples today. To kind of give you an idea of why I picked cross-endorsement buy-sell, is it's a way that I really discuss with financial professionals as well as business owners as a retirement buy-sell. I think many people, when they think about buy-sell, think of term insurance initially, and how do we get this put in place as one of us dies before it's retirement time, it pays out, and we get the business moving and the ownership transition. This is a different way to look at it and saying, why rent that buy-sell and why not make something permanent and own it and be able to transition that out into your retirement years. And so I'm going to jump into the presentation today. Give me 1 second here while I start sharing the presentation. And this is an actual output from one of our modules inside of our design hub. So give me 1 second here. So here's a quick example of one of our outputs from our design hub. It'll talk about the type of planning that we have right up here, and we're going to use, using life insurance and a cross-endorsement buy-sell planning. So the retirement buy-sell, we'll get through that disclosure page, but this is something that we created in our stop kit. If you haven't seen our stop program, which is solve the owner's problems, we've done, I think, a 4-part brew on this last year, and I think we have those out there still. This is one of the pieces that we put in there that really drives home, what are the odds that the business could lose an owner due to premature death before age 65? And if you look here, we'll use 2 males, that are both 40 years old, who are invincible. I fit in that age demographic myself, but literally if you have 2 business owners both males, both age 40, there's almost a 15% chance of one of those two owners passing away before age 65. And so if you put it down and put it in perspective of that business owner, of the other risks, that they're protecting their business, such as, errors and emissions, such as, properties, such as other types of insurances that they're using and buying insurance on every single year because they have to legally or because they choose to do so, that have much lesser risk than that. Why are you not mitigating that risk of one of you two premature passing away? And we put this into number format for them. And if you have a business owner that has multiple owners, we even give you the odds of male and female at different ages, and how to do the formula to calculate what is the odds of those. So if you haven't seen this piece, we have this piece as a standalone piece, but we put it in each of our buy-sell planning modules over at Global Atlantic. So this is a great thing of just proving points of odds of someone passing away prior to age 65. So as we get into the actual planning, here's where we put in, the 5 different owners. The plan that we're going to talk about today has 5 different owners. Each of them own, 20% of the business. And so we actually do the odds for you inside of this plan. So we've got Jim, Ron, Sue, Ralph, and Jane, all different ages, and it shows their probability of death in 5 years, as well as their death in 10 years, and gives you those outputs right inside of this Design Hub module. So, then we talk about, what is the need, what is the buy-sell, what a buy-sell is not, and how do you fund buy-sells? And so really trying to take it down into layman's terms of what a buy-sell plan is, how it can be funded, and how life insurance comes into play and what the benefits of doing it that way is. Next, here comes the visualization. I think a lot of individuals that don't understand complex situations that we a lot of times are very comfortable with, we just talk about, how this planning works. Number one, we have to get the agreement in place. Number two, we have to be able to provide the liquidity event in here. And then finally, what is the benefits of doing it this way? What is the difference of a cross-endorsement plan rather than a cross-purchase plan or an entity purchase plan? And I think this is really why I think we picked up a lot of cross-endorsement opportunities in talking about this more, is number one, it's an opportunity for that business owner to plan, and each business owner to plan differently. We have a case I was talking with Abby about earlier today, where, it started off as 2 business owners. They needed $10 million of coverage to cover that portion of their business that they owned. It was 2 brothers. The mother owned another 50% of the business, but they were going to be the benefactors of that. Well, when they took over that ownership, it was going to put them into an estate planning concern from what that asset really was and what they needed to plan for in the future. One of the 2 brothers was very motivated by, potential taxation and wealth transfer. The other brother, really wanted to focus on accumulation and how do I be able to draw additional income, during retirement. And so we used 2 separate products, one of our IUL products that's protection focused, and the other product that was accumulation focused, and was able to use this cross-endorsement planning to be able to achieve their goal of what if they passed away prior to selling the business, and then how do they be able to take this policy and utilize it for more than just the buy-sell as they look to the future. And so, let's talk about the benefits of a cross-endorsement buy-sell. Is number one, it's personal ownership and flexibility. I think that's one of the biggest things of, having this on an individual rather than the entity, is they can actually take advantage of some of the different riders and features, such as the accelerated access rider, in case they would become chronically ill or critically ill and not have to pay taxes on that. I think that's a huge benefit of setting it up this way. Another thing that a lot of people don't realize is, just because you have a buy-sell in place doesn't give you the basis increase, the cost basis increase when that ownership transfers. Using a cross-endorsement buy-sell may give them the ability to get the step up in basis. And then finally, there's no estate value increase. So the receiving surviving owners do not increase the value of their taxable estate, since the proceeds, are used to satisfy the buy-sell obligation. So another, interesting point of the cross-endorsement planning feature that may be different. Finally, some of the considerations. There's a rental fee. We'll talk about that shortly. There's limited access to the policy's cash values, and that's because they're endorsed over to the other owners. And then the transfer for value rule may apply. This gets into the taxation weeds that we really want to bring their CPA team in to discuss. So, here's how this works, the renting of the death benefit. So in this example, let's say each person had a $4 million policy, right? So the business is worth $20 million. Each person has, a $4 million death benefit, and they endorse $1 million of that death benefit to each of those owners. Well, each of those owners per IRS code says that they have to pay a rental fee for buying that death benefit that I own the policy on. And so what is that rental fee? That is basically the annually renewable term rate for the carrier of what that rental fee is. And so you say, well, how do I calculate that? Well, we actually go through and do that. So we actually put a census summary together showing exactly how much death benefit each individual has. In this example, we just used $5 million and shows each of them renting out $250,000 to each of the other individuals. Okay, so we show exactly how that works in the census summary. Then it talks about, the cost summary by release, and they're planning on releasing these endorsements by year 14 of this company. So you see the rental fees paid over that period of time, the rental fees collected, that's what each person would get back from the other owners. And this is really a tax reporting offset. I think that's the biggest thing as well. Is there money transferring hands here? No, it's really a different, it's just reporting that on their tax return that they're either paying rental fees that may offset their rental fee income and vice versa. And so a lot of times if you have owners around the same age, around the same risk class, these can wash out, and it's just a tax arbitrage play on their tax return, not so much of them actually passing money back and forth in real dollars and cents. So if you look at here, it shows what the cost, the cross endorsement cost comparison is in a bar graph, which can help show and maybe show some offsets needed that they may do some other planning on, work with their CPA. So we really try to break it down and saying, here's how those rental fees, come out, here's what they total, and here's the offsets that may occur, from the rental fees collected. Next, we put it into, a policy owner by policy owner situation. Here's their annual premiums from, the policy that they've chosen, maybe be accumulation based or be protection based, what the cash values are, what the death benefit is, what the rental fees collected are each year, the total rental fees paid, and the net outlay, as it looks towards the actual outlay of that owner particularly. Now, you look at the next part, which is the rental fees paid to each additional owner in that situation. And so you can see where we're getting that total rental fees paid and that rental fee income back. So we really put this in an easy to use design that you can use with those owners as well as use with their tax planning team. So we'll get through that real quick. And as you can see here, we break this down for each particular owner using whatever specific policy that they've chosen. And then finally, here's our assumptions. This is where we kind of cross-check all of our work, put in all the details, put in each of the ages, put in the tax brackets, the risk class, things of that nature, and put it all together in one simple place. So, what we've tried to do is talk about cross-endorsement, put that into a way that an individual can understand and put it in a visualization so they can actually see how rental fees paid to rental fees collected are, to see what that impact may be for each other, as they endorse those benefits over to one another. The final piece is once their planning is done, somebody retires, somebody walks away, somebody is bought out, they release those endorsements, to that person, and they walk away with that policy, following whatever transfer of value guidelines were assumptive at that point in time, from their CPA firm. So once I'm done with the buy-sell obligation, I now have my policy, I walk with it, and I get to utilize that through my retirement or through wealth transfer obligation at that point in time. So with that being said, I'm going to finish up my quick portion there, and I'm going to jump back over and get out of the presentation and stop my broadcast and turn it back over to you, Abby.
Thanks, Brad. Great share. Not seeing any questions in the chat box, but I have opened the lines for questions if anyone from the audience has a question for Brad. Excellent. I'll move right into the giveaway. Brad, I'm going to ask you to look into your virtual top hat, and won't you give me a number between 1 and 25?
I will pick 24.
24. Who's the winner? Who's the winner? Jay Hinkins. Congratulations, sir. Be on the lookout for an email coming your way with a Starbucks gift card from all of us here at E4 Insurance Services. Thanks for joining.
Hey, Abby.
Yes.
Question from Dan here. For our advisors that are on the line, how would they go about working with Brad to get an illustration or to consult on a business case that they might have?
Brad, you want to take it?
Yeah, I'd love to. That was in my final thing that I've taken some notes on. A couple action items is number one, if you want the piece talking about probability of someone passing away prior to 65, reach out to the E4 team and we can get that piece. We'll get that over to the entire team if they don't already have it. So that's one thing. And then secondarily, work through your E4 contact and have them reach out to me. I can take down the data, get the pertinent information, and if we have a more complex situation, we'll bring on our advanced markets team. We have 3 or 4 of the best in the business that have helped us really close some really nice deals with a lot of experience in business continuity planning. So bring those over to us, and we'd love to get on the phone with the advisor and even with their professional team that may be backing up that deal. So we've gotten them on the line with CPAs, with attorneys, things of that nature, and they can talk on the big topics and get down to the brass tacks. So great point, Dan.
Thank you.
Thanks, Brad. And you'll be sharing that marketing piece with us that you presented to today. I've got a couple attendees looking to receive that, so please send that our way.
We will do.
Excellent. Well, thanks for your time today, and be sure to tune in next Wednesday for the Brew. We'll have a special guest from NAFA National announcing an upcoming partnership with E4 Insurance Services. Thanks, friends. Happy fall, and make it a great day.